Warren Buffett, one of the greatest sage investors of all time, is sitting on a hoard of cash right now, somewhere near $300 billion in cash. He has been selling, liquidating a lot of his long term holdings, such as Apple, Bank of America stock. And that might be a clue for us to consider, why is he doing that? Why is he doing that when the stock market, the financials, the NASDAQ, tech stocks, everything seems to be going up, 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 up? And it seems like the economy is good, at least that's what the pundits say. The Federal Reserve just cut the federal funds rate by 50 basis points. That's a 50 percentage point drop, which is very rare, especially when the employment rate, the labor rate, the economy is being told to us as being very, very strong. Warren Buffett knows a few things. Now, do we need to follow Warren Buffett's strategy to a T? Not necessarily. Why? Warren Buffett, with Berkshire Hathaway, manages, invests billions and billions of dollars. Most of us don't have anything close to that. We're dealing with much smaller amounts of money as retail investors. So what Warren does with a large tranche of money, he has to be more careful, and he has fewer places to put that much money. So as he said in the last 12, 18 months, it's been hard for him to find good deals. Yeah, because he needs bigger deals, but still have to make sense to him. He's not going to just put money somewhere where it's a gamble, because Warren really doesn't gamble much, I believe. So he's got a problem. A lot of money, nowhere to put it, puts it in cash, short-term treasury bills, just sits on it because Warren is patient. He doesn't need to prove anything. He doesn't need to make more wealth. It's more of a game to him. Now, for the rest of us, I think it should be a game, but it's a game that has a lot of consequences for us. We are dealing with a very volatile economy right now. I think that's why Warren is sitting on the sidelines. He doesn't want to play that game. Most of us have to keep our money working for us. We can't sit on the sidelines too long because, well, inflation, as much as they say it's coming down, inflation's still there. In fact, I would say that inflation is going to pick up and rear its ugly head, more so with this decrease in the federal funds rate. That's going to gin up the markets. It's going to cause the dollar, purchasing power of the dollar to go down. Probably you'll see precious metals go up in value. It's the sage problem we have. We feel like we're rich, but we don't have much purchasing power. So we've got to keep our money working for us. How do we position our money? When do we go back into equities? Or when do we add more to our equity positions? When do we do more in terms of private credit, whether it's treasuries or private lending in real estate? There's lots of places you can put your capital, but you've got to understand where that can be. And I love alternative investments. Warren loves alternatives. His alternatives are businesses. He loves businesses. He does very well there. I love real estate. I've done very well there. It's a place to be outside of just buying index funds and ETFs and putting your money in various annuities on Wall Street, where you actually have tangible assets that you can actually work with the market, understand what the market gives you, and be more prudent about your allocations. I think this is a time like never before when we have to be more prudent about where we put our capital. How do you learn how to do that? Well, you can spend years and years in studying like what Warren did, or you can full time by finding the right education, the right groups, the right people who are doing it together, a community. It's a choice you can make, but I think whatever you do, you've got to be on it like nothing before. It's all about your freedom.